Welcome to day 16 of my real estate question series, focusing today and through the end on buying a home. Today's focus is the initial step for buying a home. The first step in the home buying journey is to check your credit score. A credit score of 750 or higher signals financial reliability to lenders, increasing your chances of qualifying for loans with low interest rates. Factors like consistent on-time payments, diverse credit types, and long-term borrowing history contribute to a high credit score. Different mortgage lenders offer varying loan options based on credit scores. A high credit, 750 and above, opens the doors to favorable loan terms and lower interest rates. Good credit, 700 to 749, still offers decent loan options, but consider boosting with a substantial down payment. Fair credit, 650 to 699, loan options are available but may require more effort to qualify. And poor credit, 550 to 649, is a challenging range with limited loan options. Explore FHA, conventional, or VA loans carefully. FHA loans are ideal for first-time homebuyers and require a credit score of at least 580 and accept down payments as low as 3.5%. Be prepared for higher insurance premiums due to lower credit scores. Conventional loans offered by Freddie Mac or Fannie Mae lenders require a credit score of 620 plus, with varying down payment requirements and private mortgage insurance for down payments less than 20%. The VA loan is specifically for military personnel and spouses and requires a credit score minimum of 620 and may not require down payment, although fees can be wrapped into the loan amount. When applying for a loan, avoid making major credit purchases or closing credit accounts to prevent negative impacts on your credit score. Welcome to day 17 of my real estate questions series, focusing today on the timeline of buying a home. The average home buying journey takes around 4.5 months from choosing a home to making an offer. After your offer is accepted, the process typically takes another 30 to 45 days to finalize, considering steps like home inspection, appraisal, title search, mortgage finalization, and reviewing closing documents. Several factors can influence the duration of buying a home, including property location, market demand, economic conditions, and individual variables. To expedite the process, partnering with an experienced real estate consultant is invaluable. They help you streamline options, negotiate with sellers, and navigate complexity efficiently. Once you have a negotiated sales contract, closing on the loan involves 5 key steps. Number 1 is the loan application. Number 2, documentation and processing. Number 3, property appraisal. Number 4, underwriting. And number 5, closing. While these steps take time, proactive preparation can prevent delays. However, certain actions can slow down the process, such as being unresponsive to lender requests, not having paperwork organized, skipping pre-approval, unexpected issues in underwriting, forgetting homeowners insurance, or encountering low appraisals. Welcome to day 18 of my real estate question series, addressing today's question, can I back out of buying a house? The short answer is yes, you can back out of a home purchase, but it may result in losing your earnest money. Earnest money serves as a security deposit given to the seller upon signing a contract. State laws dictate refund conditions and when sellers can retain this deposit. If you withdraw from the contract without a valid reason, forfeiting earnest money is likely. Backing out of an agreement without a legitimate cause can lead to legal consequences as well, as outlined in the purchase agreement. This document specifies crucial details like seller responsibilities for repairs and contingencies for the real estate deal. It delineates under what circumstances you're legally permitted to withdraw from the deal. However, certain scenarios justify breaking a purchase agreement. These include losing employment, inability to sell your current home, or facing mortgage approval challenges. It's prudent to wait until achieving financial stability before proceeding with a home purchase. Issues related to the property, such as failed inspections, unresolved problems, or title transfer difficulties, also warrant reconsideration of the agreement. For instance, if a survey reveals encroachment on a neighbor's land, rectifying such issues is crucial to proceed with the purchase. Welcome to day 19 of my real estate questions series, diving into the negotiability of real estate prices. In the world of real estate, prices are indeed negotiable, but success hinges on understanding market dynamics and seller motivations. For instance, in a seller's market characterized by high demand, lowball offers risk missing out on desired properties due to competitive bidding. During early 2021, the average U.S. home cost was $403,600, a figure that might seem daunting. However, mastering negotiation tactics empowers buyers to secure favorable deals without compromising on their ideal homes. Consulting a skilled negotiator enhances your negotiating prowess, ensuring your offers stand out while aligning with market trends and buyer demands. This expertise aids in navigating negotiations to reach fair price agreements beneficial to both parties. Upon offer acceptance, engaging a certified home inspector becomes pivotal. Inspection findings can serve as leverage for renegotiating prices or requesting repairs before closing. Skilled negotiators, like real estate consultants, facilitate this process to ensure issues are addressed without jeopardizing the deal. Welcome to day 20 of my Real Estate Questions series, where we delve into the strategic timing of home purchases. Timing plays a crucial role in securing the ideal home at the right price. Understanding market dynamics and seasonal trends can significantly impact your home buying experience. Analyzing past data, April emerges as a peak month for new listings, offering a diverse range of options. Conversely, November presents opportunities for favorable deals, with sellers often reducing prices as the year winds down. August stands out as a sweet spot, blending lower prices with abundant housing choices. Sellers keen to close deals before summer's end often offer price reductions, making it an opportune time for buyers. In Oklahoma, early year purchases are typically advantageous. The state's active months span from April to June, providing ample inventory for negotiation and potential discounts on sale prices. Expert real estate consultants at our company can guide you on leveraging these seasonal advantages for optimal home purchases. For National Buyers Day, Christmas Day, and Easter Sunday are noted as prime house buying days, although those patterns may vary by region. Welcome back to day 21 of our real estate exploration, where we tackle the strategic decisions of home selling and buying. Today's question: should I sell my home before buying a new one? This question hinges on your current progress in the home search process. Selling your home first offers certain advantages, but also comes with logistical considerations. If you sell your home before finalizing your new home choice, you may face the need for temporary accommodations like short-term rentals or staying with friends or family. This could involve moving twice or incurring storage costs, impacting your convenience and budget. However, selling your home beforehand empowers you with a substantial down payment for your new purchase. This financial leverage enables you to make competitive offers without exceeding your budget constraints, potentially securing your dream home. Moreover, not feeling pressure to accept an immediate offer on your current home allows you to wait for favorable terms. Once you receive an offer aligning with your expectations, you can confidently proceed with your new home search. For personalized strategies and expert guidance on navigating the home sale and purchase process, consult a seasoned real estate professional. Welcome back to day 22 of our Real Estate Question and Answer series, focusing today on understanding the payment structure for real estate consultants during home purchases. Today's question: how does my real estate consultant get paid when buying a house? Real estate consultant compensation is typically intertwined with the sale price of the home, dispersed at the closing of the transaction. Commissions are commonly structured as a percentage of the sale price or a predefined fee divided among various parties involved, such as the listing agent, listing broker, buyer agent, and buyer broker. The negotiation of commission rates is flexible and subject to agreement between parties. Generally, an agent receives a portion of the total commission, often around 1/4, though this can vary based on the terms set during negotiations. For instance, if the total commission agreed upon for a home sale is $12,000, each party involved might receive $3,000, including the listing broker, buyer's broker, listing agent, and buying agent. The party responsible for paying the agent's commission can vary. It may be the seller, the buyer, or a combination depending on the negotiation terms outlined in the contract with your real estate consultant. Welcome back to day 23 of our real estate question and answer series, where today's focus is on understanding the closing cost incurred by buyers when purchasing a home. Today's question: how much does a buyer pay in closing cost? Buyers should budget for closing costs typically ranging between 3 and 5% of the home sale price. In 2020, the national average for closing costs, including taxes, was $6,087. These costs encompass various essential items, including but not limited to loan origination fees, approximately 1% of the loan value, mortgage application fee, $25 to $150, appraisal fee, $300 to $1,000, points on the mortgage, which vary, wire transfer fee, $10 to $50, private mortgage insurance application fee, which varies, lender required home inspection fees, $300 to $1,000, credit report, $30 to $50, survey fee, $85 to $600, prepaid homeowners insurance, mortgage interest, and property taxes, which varies, lender title insurance, around 0.1% of the home sale price, mortgage transfer taxes, which varies, and buyer's agent commission, which may be negotiated with the seller. Additional costs may include real estate attorney fees, pest inspections, or natural disaster certifications depending on the location and specific circumstances. Buyers can negotiate with sellers regarding the responsibility for covering closing costs, bearing in mind seller contribution maximums imposed by mortgage type guidelines. Closing costs are settled during the home transfer process, commonly known as settlement, occurring on the specified closing date outlined in the purchase agreement. Welcome to day 24 of my real estate question and answer series. Today's focus is on saving money when buying a home. Are you wondering how to save on your home purchase? Let's explore some smart strategies. Number one, explore financial programs. Check eligibility for FHA, FMHA, or VA loans, especially if you're a first-time buyer. These programs often offer favorable terms and down payment assistance. Number two, use down payment assistance. Numerous programs, like the Oklahoma Housing Finance Agency, provide assistance for qualified buyers. You may receive loans up to 3.5% of the loan cost, interest-free, saving you significant money. Number three, consider VA-backed loans. If eligible, VA loans can waive the need for a down payment and often offer better terms than traditional loans. Number four, save for a 20% down payment. Financial experts recommend aiming for a 20% down payment. This avoids private mortgage insurance costs, which can add up monthly. By leveraging these options, you can save substantially on your home purchase. Welcome to day 25 of my real estate question and answer series. Today's topic is about earnest money. Earnest money, often called a good faith deposit, is typically 1 to 3% of the home's purchase price. It demonstrates to the seller that the buyer is serious about the transaction. Once paid, earnest money is held in escrow, managed by a third party until the sale is finalized. At our company, we entrust the earnest money to the title company, where it's kept separate in an escrow account. If the buyer backs out due to an agreed upon contingency, like loan approval, issues, or unforeseen circumstances, they receive their earnest money back. However, if they withdraw for other reasons, the money goes to the seller. Examples of refundable situations include loan denials or unexpected job loss. Welcome back to day 26 of my 30 days of real estate questions. Today we'll answer the question, what is title insurance? Title insurance protects homeowners from claims against their home that occurred before they purchased it, such as a prior owner's failure to pay taxes or fairly compensate contractors. If you have title insurance, you're covered for legal fees or title disputes that may arise during your home ownership. For instance, if a roofer attached a lien to the home 5 years before you bought it, that lien could hinder you from selling your home in the future. Title insurance ensures that there are no such liens when you buy the property. If the title insurance company missed that lien, they would be responsible for paying it. In some states, title searches only go back to the last previous sale. However, in Oklahoma, each title search goes back to the property's first sale. There are two types of title insurance. Lender title insurance is typically required when selling a home, protecting the lender from any claims on the house. Owner title insurance is optional but recommended. This one-time fee protects you from unexpected title issues for as long as you own the house. Purchasing both insurance policies is usually advisable, with the combined cost being about 0.5% of the home's purchase price. Welcome back to day 27 of my 30 Days of Real Estate Questions. Today we'll answer the question, how much of a down payment should I make on a house? Making a down payment of 20% is ideal because it helps you avoid paying private mortgage insurance, or PMI. PMI is required for all buyers who owe more than 80% of the home's appraised value. If you can't afford 20%, most lenders still typically require a minimum deposit of at least 3% for the sale to proceed. Depending on your location and mortgage eligibility, some lenders may require a minimum down payment of 5%. There are special programs available for first-time buyers, veterans, or rural residents that may eliminate the need for a down payment. Keep in mind that monthly payments are based on the total loan amount. Financing 100% of the loan will result in higher monthly payments. For example, on a $200,000 house with a 5.75% interest rate on a 30-year loan, a 20% down payment, or $40,000, would lead to a monthly payment of $1,184 before taxes and insurance. With a 3.5% down payment, or $7,000, the monthly payment would be $1,561, and with no down payment, it would be $1,609, both requiring PMI. So the monthly payment for a home with no down payment results in monthly payments that are $425 higher than with a 20% down payment, in addition to the PMI required. Welcome back to day 28 of my 30 Days of Real Estate Questions. Today we'll answer the question, how long then can the seller take to respond to my offer? Sellers typically have about 72 hours to respond to an offer, although this time frame may vary by state. However, if a bank is selling a home, the response time can extend to several days or even weeks. If you submit an offer and receive no response, it may indicate that your offer was perceived as too low. Some sellers deliberately refrain from responding to convey their displeasure with the offer. While real estate consultants are required to inform sellers of all offers, sellers are not obligated to respond. In case of no response, it's advisable to ask your real estate consultant to contact the seller's consultant. This ensures that your offer was presented and allows you to understand the reason for the lack of response. To enhance the chances of your offer being accepted, your local real estate consultant can assist in striking a balance between a reasonable cost for you and an attractive price for the seller. They analyze recent sales of similar homes, current listings, and unsold homes alike. Market conditions, whether favoring buyers or sellers, are often considered to craft an appealing offer. Welcome back to day 29 of my 30 Days of Real Estate Questions. Today we'll answer the question, why do I need a mortgage to buy a house? While it's true that you don't need a mortgage if you have enough cash to purchase the home outright, most people rely on mortgages as a vital tool to achieve home ownership. Being pre-approved for a loan can expedite the underwriting and buying processes, helping you move into your new home sooner. During the underwriting process, loan underwriters evaluate the 3 C's: your credit history, your capability to repay the loan, and collateral. A positive payment history, a good credit score, and a steady income can lead to a quick turnaround time of just a few days for loan approval. Once your loan application is approved, you'll receive clear to close status. At this point, your agent will guide you through signing closing documents, making the down payment, and transferring the home's title to you. Welcome to the final day of my real estate question and answer series. Today, let's explore how a real estate consultant can assist you in buying a house. Number 1 is expert guidance. A buyer's real estate consultant helps you find homes within your budget and preferences. Number 2, efficient scheduling. They arrange visits to houses you like, making the process smooth and convenient. Number 3, skilled negotiation. Top consultants negotiate with sellers to get you the best deal possible. Number 4 is market insights. With in-depth knowledge, they narrow down options, saving you valuable time and money. Number 5, early opportunities. They may even hear about potential properties before they hit the market officially. Number 6, peace of mind. An experienced consultant eases the overwhelming process of home buying, providing daily communication and support. Number 7 is resourceful assistance. Our company offers valuable resources to ensure a pleasant home buying experience. There are several key questions you should ask your real estate consultant. How long have you been a real estate consultant? Are you available to prioritize my needs? What's your track record in negotiation? What services do you offer? Why should I choose to work with you? Can you provide references? Since 2024, you can't look at a house without having a buyer's agreement filled out and signed by you and the buyer's agent. The only exception to this is for open houses. You may not need a buyer's agreement to visit an open house. The seller's agent can serve as your buyer's agent, but just remember, the seller's agent has a fiduciary responsibility to the seller, which means that the seller's agent will do whatever is best for the seller and not necessarily what is best for you. A buyer's agent will have that fiduciary responsibility for you and not for the seller. Thank you for joining me on this real estate journey. If you have more questions or are ready to start the buying process, feel free to contact me at 405-401-0099 or visit my website. Good day and happy home buying.